preference share premium should be paid out of the equity share premium. If the equity share premium is not available, they should be paid out of the profit and loss account. Security premium account data to security premium of redemption. So redemption premium has been paid with the help of equity share. Redeemable preference shareholder, how much? 1,10,000. What's the balance available? 8,000. Totally it will tally for 3,58,000. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Year College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Corporate Accounting, 4th semester, Unit 1, Session 5, in favor of redemption of preference share. I already told in the last session also, there are two types of share. One is called equity share, another called the preference share. Equity share cannot be redeemed, whereas preference share can be redeemed after a stipulated time, maybe 5 years, maybe 6 years, maybe 10 years. The maximum number of years available as per the Companies Act is 20 years, whereas equity share cannot be redeemed, but they can transfer the share from one party to another party till the liquidation. They won't get their money. We'll move on to problem now. So here if you see that your preference share issued and redeemable preference share, how much is there? 1,000 of rupees, 100 each. It is 1 lakh. This is important. Then 18 existing equity share, 18,000 equity share of 10 each. You got a security premium, general reserve, profit and loss account. This is important. Then preference shares, you decided preference share at a 10% premium. Following, all the investment were sold. Investment cannot be utilized, but only to raise the cash at bank. It is not for redemption, only raise the cash at bank. All the patents were sold. It is also raised in cash at bank. The company made a fresh issue of 2,000 equity share of 10 each at a premium of 10%. So first they will issue the share. For the balance of redemption, they will create the CRR. First issue the share and create the CRR. What they are doing? Now they are issue the share. So CRR will be created with the help of general reserve and profit and loss account. Come back. So they are issuing the share, 2 lakh. So totally how much you require actually? 1 lakh. Preference share 1 lakh. Plus premium. What is the percentage of premium? 10%. 10,000. Totally require 1,10,000. Required. So face value required is 1 lakh. Premium required. Preference share premium should be paid out of the equity share premium. If the equity share premium is not available, they should be paid out of the profit and loss account. Now we'll move on to answer. First entry, when the investment were sold, for how much money? 50,000. What's the value of the investment account? 56,000. Sold for 50,000. Entry, bank account data, loss on sale of investment account data to investment account. So we suffered a loss of 6,000. Transfer to profit and loss account. Profit and loss account data to loss on sale of investment extent of 6,000. Then we sold the patent. What's the value of the patent as per the book value? Patent is 4,000, which has been sold for 6,000, means at a profit of 2,000. Bank account data 6,000 to patent account 4,000 to profit on sale 2,000. That will be transferred to profit and loss account credit entry. Profit on sale of patent account to profit and loss account to the extent of 2,000. So one we suffered a loss, here we suffered a loss, here we got a gain. Then equity shares were issued here. How many equity share? 2000 at rupees 10 at a premium 10% mean at rupees 11. Entry bank account data. This is 2000 equity share at rupees 11. So 22,000 to equity share capital 20,000 to security premium 2,000. Now preference share premium should be paid out of the equity share premium. Entry security premium account data to security premium of redemption. So redemption premium has been paid with the help of equity share. What's your face value? 1 lakh to be paid. Out of 1 lakh, you already got how much money? 20,000 in equity share. Now the balance we require is 80,000. You have to create an account called capital redemption reserve with the help of general reserve and profit and loss account. Create in the profit and loss account how much available? So profit 50,000 plus 2,000 minus loss 6,000. How much available? 46,000. You take 34,000 from the general reserve to make 80,000. So CRR is created with the help of these are the two sources are. One is profit, one the general reserve to the extent of 80,000. Another 20. Totally, it becomes 1 lakh. Now, transfer entry. Redeemable preference share capital account data are 1 lakh. Redeemable preference share premium account data are 10,000. To redeemable preference shareholder account 1,10,000. Paid them. Redeemable preference shareholder account data to bank is a transfer entry. Now you have to pay. Redeemable preference shareholder account data to bank account. Come back to balance sheet here. Balance sheet sources shareholders fund. Share capital 20,000 equity share of 10 each. It is 2 lakh. Then reserve and surplus security premium 20,000 by issuing the new share 2,000. How much utilized? 10,000. How much left over? 12,000. General reserve 40,000. How much utilized for CRR? 34. This is for CRR. How much left over? 6,000. Then capital redemption reserve you are created. This is CRR. Created. Then non-current liabilities, long-term liability nil, then current liability and provision for it is 60,000. Totally it is 3,58,000. Come back to asset side. Asset side, non-current asset, fixed asset, land and building 2 lakh, furniture 40, which are the fixed assets are 2,40,000. Current asset, stock 6,000, debt are 7,000, cash at bank existing 40,000 by selling the investment 50,000 by selling the patent 6,000 here by issuing the equity share with a premium 22,000 and pay the redeemable preference shareholder how much 1,10,000. What's the balance available? 8,000. Totally it will tally for 3,58,000. Very simple. Major question. 15 marks question. Very, very simple. Hope you understand. So what is the point to be remembered? When issue the share, create the CRR. CRR will be created with the help of general reserve and profit and loss account. Preference share premium will be payable out of equity share premium. If equity share premium is not available, it should be paid out of the profit and loss account. How it will be? Preference share premium should be paid out of equity share premium. If equity share premium is not available, it should be paid out of the profit and loss account. So first issue the share, then create the CRR with the help of general reserve and profit and loss account. What's the entry? General reserve account data, profit and loss account data to CRR. By chance, if the number of shares are not given, create the CRR. How entry? General reserve account data, profit and loss account data to CRR account. For the balance, you have to issue the share. This is a major. Very, very simple. No complicated. So one question for 15 marks. one question for 10 marks, 2 marks question. Totally 15 plus 10, 25 plus 2, 27 marks coverage. So it's a problem. Hope you understand. We'll have one more session in the next one. We'll have that bonus share in the next session. Till then, goodbye. Meet in the next class.